Oh my God, what am I looking at? Oh, you must be the new fella. You're looking at a chart of gold. It is a snapshot of the price movement of gold, and it is all you really need. It's got all the information there, everything. And what I wanted to demonstrate with this little video is how easy it is actually to determine whether you should make the trade, where you should place it, where you should protect yourself, when you should get out, and so on. Now, this video is by no means comprehensive. What I'm leading to is at the end, you won't know everything. You won't fully understand. I'm prepared to send you a free little booklet that expands on the concepts here and defines some of the terms for you and so on. By the time you're finished, you will have a much better understanding of what's going on. So, first of all, thanks for taking the time. My name is Charles Goddard, and the gold chart we're looking at, as you can see, I've put some black lines, black vertical lines on it, and I've put some H and L's on it to represent highs and lows. And we're going to use that first of all to determine what trend we're in. An uptrend is defined by higher highs and higher lows, and a downtrend is defined by lower lows and lower highs. And if you can't see it, then move on to something else. You don't have to sit there and try and figure some chart out. You can move on to silver or something else, anything, Apple. And only go with what you can see and identify. So in this case, on the left hand side, you'll see the black line, and you'll see a low and then a high, low and high, and this is higher highs and higher lows, and it represents an uptrend. So at the black line, we are entering a long trade with gold. Now, the next thing is, well, I don't have a futures account, so there are symbols out there that we'll use as proxies. So since we are going up, we're going to go long. Again, look for the booklet for these definitions. We're going to go long. We're going to use the symbol UGL, which is a proxy for the direction of gold going up. And you'll see that the way we're placing our trade is that when that red line crosses the blue line, crosses above the blue line, we are then placing a buy trade, and we are putting our stop loss, the point at which we would be wrong, just below the most recent low. And once the price has moved up 10%, we're going to take half the position off the table, and we're going to move our stop loss to the point that we entered the trade. This is the break-even point. So what we've got then is we've got a little bit of profit in our pockets. Our stop is now at break-even, so no one can take any money away from us. Even if the price comes back and stops us out, we still have our profits in our pocket. Then we're going to let the price go as far as it's going to go. And the next question then is, well, when do we get out? We're going to get out when the price, not the red line, but when the price, one of those candles, closes below the blue line. When that happens, we are leaving this trade. We are done with it. We are finished, and we will count it up and see how we did. Now, if we go back to our gold chart and we move along, we can see the higher highs and the higher lows change over to lower highs and lower lows. Definition, downtrend. So now we're only going to go to the short side of the market. That is, we're going to profit from gold going down. So now the symbol for that is GLL, another direction symbol that will profit as gold goes down. So we can look at that chart, and we've got the same things established. We can see where the red line crosses the blue line, that's where we're buying. We can see we're going to put our stop just under the most recent low. When we've got an increase of 10%, we're going to take half our money off the table. We're going to move our stop to break even, and we're going to get out of that trade when the price, not the red line, when the price crosses below the blue line. Now, one of the things that we can add a filter to this, which is what I've done. The red line in the bottom part of the chart is called the rate of change. This is our representation of energy. What we want to see, if we're going to buy GLL or we're going to buy UGL, before we do that, even when the red line has crossed the blue line, we want that red line in the bottom frame to be above the zero. So that black line down the middle of that frame is the zero line. We want that red line to be above. That just gives us that just a little extra probability that we've got a good trade. Now, the last frame of this video is just a free offer to you. If you want terms and process and a little more information, and I don't mean a lot of information, but enough to make you feel confident in what you're doing, just drop me a line with your email address, and I will happily send you a little booklet for you to go over, and hopefully you will improve your trading in or investing, and that's whether you're a rank beginner already doing some stuff, or whether you're a financial advisor that deals mostly with mutual funds and broader based stuff. This can help you as well, and there's zero cost. Just drop me a line and I will send it to you. So thank you very much for listening, and hopefully I will hear from you in the near future. Thank you. Bye now.